it's hard for all of us to even have that sort of tell. What I would say is relative to the markets are pricing in either the soft landing or the Nouriel Roubini no landing. I think what they're not pricing in is the hard landing. And something to point out, and I'm going to start making this point more, I've made it a little bit over the last month or two, the Bloomberg Commodity Index last year was down 10%. It's down this year again. I think so over the last year or so, or over the last, let's call it 14 months, I think it's down. It's definitely down more than 10%, but I think it's closer to 15%. Some of our commodity analysts have made the point that that weakness is a result of demand, and that they are concerned that there could be some sort of a recession. That clearly has not presented itself. But whenever you have such a big, it's sort of like the divergence between the US and China, but you have this big divergence between commodities and stocks, that will converge at some point. One of the classic times, of course, was 2008. I'm not saying that this is like that at all. And in that case, commodities were actually going higher on oil at 150 until they weren't.
Well, it's interesting because you have seen consumer delinquency start to pick up. One person we're talking to tomorrow is the Lending Club CEO, because houses, cars, most people buy that on credit.
Yes.
One question I have, Mike, how much are you guys thinking about how much these higher or high for longer interest rates are going to start cracking at things that people have largely levered up on?
Well, it doesn't really change the housing picture because almost everybody these days is in a fixed rate mortgage, so they're all paying nothing, 3%, 4%, which is why they don't have any houses for sale, and prices go up. Autos, it would affect going forward, but the auto companies tend to produce their own financing, so they can always come in lower than what the prime rate is. It's more credit cards, and if your credit card interest payments go up a lot more, that could be a problem. We've seen at the lower socioeconomic levels some increase in delinquencies, but in general, people's debt-to-income ratios have dropped significantly from even before the great financial crisis. So it looks like people can afford this, which may be one reason we haven't seen the economy really collapse, because people are able to deal with these interest rates.
Well, I would imagine that on Wednesday and Thursday, several lawmakers will ask the Fed chair about housing prices specifically. I'm guessing that will happen.
Elizabeth Warren
That's
has
who I'm
already
thinking
made
of.
it clear.
Yeah, that's exactly who I'm thinking
And
of.
if we all want to really save the economy, I know where you can get some sleds.
There we go. Get some sleds if there's still going to be snow. A big thank you to Michael McKee, Bloomberg News International Economics and Policy Correspondent. Also, Abigail Doolittle, Bloomberg News Markets Reporter, both here in our studio. Coming up, what diversity, equity, and inclusion look like on Wall Street today. Anxious, fraught, and changing fast. It's today's big take, one of the most read on the Bloomberg terminal. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day right now with the S&P 500 index lower, little changed on the day, down less than a point. We've got the Dow lower now by 89, drop there of 0.2%. The Nasdaq Composite Index is down 22, a decline of 0.1%. The relentless rally in stocks is taking a breather as traders await this week's batch of jobs data, along with remarks from Fed officials as they look for clues about the path of interest rates. 10-year yield, 4.21%. The 2-year right now, 4.60%. Spot gold up 1.5%, 21.14 the ounce. West Texas Intermediate crude lower now by 1.7%, 78.62 a barrel. Bitcoin, what a story there today, surging 6.3%. Bitcoin now at 66,840 on Bitcoin. Ark House Management and Brigade Capital Management have boosted their offer for Macy's by 14% after the retailer turned down a previous proposal.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
At Bank of America, certain internal programs that used to focus on women and minorities have been broadened to include everyone. And at Bank of New York Mellon, lawyers have advised executives to lose hard metrics for workforce diversity. After all, this is what diversity, equity, and inclusion looks like on Wall Street today. Anxious, fraught, and changing fast. It's today's big take and among the most read stories on the Bloomberg terminal, written by the team of Max Abelson, Simone Foxman, and Ava Benny Morrison. So let's get to the interview. Max Abelson is Bloomberg News finance reporter, and Simone Foxman is Bloomberg News equality team reporter. They're here in the studio. So Max, I want to start with you because I'm wondering about the motivation for this shift here. Is this all because, can we attribute, like how much of this can we attribute to tweets from Bill Ackman and tweets from Elon Musk?
Well, if Bill Ackman or Elon Musk is listening, I'm sure they would be tickled by the thought that they have that much influence. But I am betting that although their voices matter and they definitely influence corporate culture, I think it might be helpful to sort of separate out in our minds what's going on. One of the things that's changing on Wall Street and Wall Street culture.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
So some of the groups that are outlined under the Civil Rights Act, based on race, gender, disability, and beyond, you're starting to get into legal gray area. And so what's happened is that the likes of Edward Bloom, who was behind that Students for Fair Admissions decision back in June, as well as AFL, America First Legal, the group spearheaded by Stephen Miller, have started going after companies that they feel are crossing the line, offering some benefit to some protected group and not to others. And this is the subject of these reverse discrimination
How effective
suits.
has America First Legal been?
Well, let me try to answer that question but with a little bit more broadness, which is that what Simone and Ava Benny Morrison, our colleague, and I reported on with our colleagues, including David Gillen, our editor, who did a really nice job on the story. It's not that Wall Street banks yesterday had DEI programs and today have none. It's not a binary switch. It's something more nuanced and in a way kind of more interesting than that. Instead, we are seeing, like your question was about how effective these changes are. The lawyers that we talk to inside and around banks, they like to think about these changes as like kind of tweaks. Like what they're saying is, you know, it's not totally clear if anything on the ground is going to exactly change. On the other hand, we know from our data reporting that the banks have long been essentially run by white men. We know that a few years ago, you know, although there had been a legacy of work on diversity, a few years ago they came out and said, listen, recruitment programs, retention programs, we get it. We're going to fund this. We're going to dedicate ourselves to this. And now there's, I think, a worry that the recent progress is going to pause and even slide in the wrong direction.
We can be even more specific. Some of these programs were really traced back to the murder of George Floyd, when many of these banks doubled down in a massive way, particularly with black populations in the United States.
Yeah.
So to your point, the tweaks are not a full reversal, but what exactly is being pulled back?
Essentially, these initiatives, fellowships, and things for protected groups. So, like the Possibility Summit at Goldman Sachs, tying compensation specifically to really granular diversity targets. That's something that's a little bit more of a legal gray area. But I think the concern from the activists is that it goes a lot farther. You start talking about stop talking about these initiatives, these being priorities, which we saw clearly, and as Tim and I talked about on Friday, clearly in the legal language, everyone's toning things down. And so what does it mean when you tone things down?
And let me add to that I think this one might impress you because it took me back. That very idea of having goals is changing. So we saw, now listen, this is not JP Morgan or Bank of America, but Citizens Financial is a seriously big institution, even if it's smaller than a Wells Fargo. Their last regulatory filing, I believe it was Simone and maybe our colleague Jeff found this, they stopped referring to having specific goals. They used to say women and people of color are going to make up half of our candidates for low level, mid and senior level roles. A simple goal. And now no longer.
Well, now, admittedly, they still say that this is aspirational, but you have as well Bank of America through its sponsorship programs. The source was telling us, saying, are these still really necessary, or have they done their job?
I would say what's so surprising to me is that we've done so much reporting around discriminatory issues that have faced banks in the past, whether we're talking about legacy stuff like redlining or not loaning to people of different races at the same rate that they would loan to white people, for example. And also the challenges that you brought up, Max, with diversity in the top echelons of the ranks. My question is, if you get rid of these programs, and not completely get rid of them, like you said, it's not a binary program, but if you don't put the same energy into them that you were doing previously, then how do you change some of these fundamental issues when it comes to diversity at the top, and then also making sure that the product that they're offering is one that gives people equal access?
It's a profound question, and let me, rather than answering it, because it would be, I think, hubris for me to try to answer, because I don't think anyone knows the answer, let me share with you something that we heard from a really influential Wall Street banker who said that he has watched or heard like the influence that executives who are in charge of diversity recruitment, that they used to have influence with decision makers. They would sit in a room, people were up for, I guess hiring or promotion, whatever it is, and they would have some sway. And what this person told us, asking for anonymity, is that colleagues who in recent years were willing to be open to diversity recruitment, that they're now reverting back to the way they were before, exactly as you said, Shonali, before George Floyd was murdered.
Well, yeah. And when you think about these broad diversity initiatives to help, the idea that having a more diverse workforce is going to allow you to offer more equitable products across the country, one of the few ways that people really think that they can hang on to these initiatives in the face of all these legal woes is, how much money do they make us? If they're making us more money because we're reaching a different group or we're doing different deals that we wouldn't have thought about before, then there's incentive there.
That's such a nice idea. But one thing about banking that we all know is that it's a relationship business. This is almost how you got into this problem in the first place. And if you're a reporter reporting on diversity statistics, we were able to track progress at many of these banks that are reporting over time. If those goals, if those metrics start to go away, then how do you know that money is actually going to the right places and that people are actually hiring people based on their metrics?
Well, we're going to have to keep talking about that, because if the banks used to not disclose their what we call workforce demographic data. So it's a way of saying, here in the US, 10% of our overall workforce is black, but 2% of our executives are black, or are female, or Asian, or indigenous. Shonali, if they stop disclosing those numbers, I promise you we will report on it and we will track it. We'll still try to get that data, but just to be clear with you, I do not know of any major Wall Street bank that has gotten less transparent about its data. The change that we're clocking now have to do with goals, have to do with the future. If the banks stop describing their workforce demographics, that would be a huge story, and Simone and I and our colleagues will be watching to see if that happens.
Yeah, and I think we should also emphasize there are more people of color, more women in executive roles than there were just a couple of years ago. And so, the onus, for supporters of having a more diverse workforce, which the banks say they are, is to keep making sure that number goes higher, whether or not you can have the same programs that you had a couple years ago.
Well, like I said, it's a really important piece. It's among the most read on the Bloomberg terminal. It is the big take. Our big thank you to Bloomberg News finance reporter Max Abelson, also a Bloomberg News equality team reporter Simone Foxman. They're here in our Bloomberg studio. Hey, taking a look at markets right now, the S&P 500 is in the green. And remember, if it does finish in the green today, even if it's up by just 1/100th of 1%, it's still the 16th record of the year. The Dow is down 0.2%, while the NASDAQ composite is down close to 0.2%. Coming up next, we're going to dive into the world of private credit. We're going to do that with Christina Paget, head of leverage finance, research and analytics at Moody's Investor Service. In the meantime, let's send you down to Washington, D.C. for a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nance.
Thanks, Tim. The U.S. Supreme Court has thrown out the ruling of Colorado's highest court that Donald Trump cannot appear on the ballot in that state because he engaged in insurrection January 6th. Trump thanked the court for its decision.
I think it's a very big day for America. I think it's a very big day for liberty, and I think it's just a great day for this country.
Trump says today's ruling will have a unifying effect. The justices were unanimous and said that the decision on whether to disqualify someone from running for office if they engaged in insurrection should be left up to Congress, not the states. Alan Weisselberg, the former chief financial officer of Donald Trump's real estate company, pleaded guilty to perjury today in connection with testimony he gave in New York State's civil fraud case against the former president. Weisselberg entered the plea following talks with Manhattan District Attorney Alvin Bragg. President Biden is putting the finishing touches on the State of the Union address that he'll be giving this Thursday. He's been at Camp David all weekend working on the speech that will play up the accomplishments of his administration. A preview of that speech indicates he'll outline how he's making the wealthy pay their fair share and how he's working on reaching a bipartisan compromise on things like veterans issues and fighting cancer. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World headquarters, I'm Charlie Pellet. 240 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now. A sudden move higher for the S&P 500 index, up 11 points now. That is a gain of 0.2%. NASDAQ Composite Index just turning positive for the first time this day. We could see both more records for the S&P and NASDAQ if we close higher today. The Dow, little change right now, down 6 points, down less than 0.1%. But the key takeaway, best level of the day right now on the S&P with a sudden surge higher. We've got the S&P up 10 now, up by 0.2%. 10-year yield 4.22% with a 2-year that's yielding 4.60%. Spot gold up 1.6%, 21.16 the ounce. A retreat for crude oil. West Texas Intermediate crude down 1.5%, 78.76 a barrel. And Bitcoin back with a 67,000 handle. Bitcoin now at 67,303. Bitcoin jumping now by 7.1%. American Airlines has agreed to buy 260 short-haul aircraft that include a massive deal for Boeing 737 MAX jets. American down now by 4.2%. Boeing shares, they're up by 0.5%. JetBlue has formally abandoned its pursuit of Spirit Airlines more than a month after a federal judge blocked the $3.8 billion acquisition on antitrust grounds. We've got JetBlue up now by 3.9%. Spirit is slumping 11.1%. Recapping, stocks are trading mixed, but the S&P close to the best level of the day, up 7 points now, up 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Tim Stenovic and Shanali Basic in for Carol Master this afternoon. It is Bloomberg Business Week. Well, each week here at Bloomberg, the Markets Live team does an investor survey. It's the MLive Pulse, and it asks questions about different elements of financial markets. This week, it's all about private credit. And a majority of respondents in the latest Bloomberg Markets Live Pulse survey said that private loans are a safer bet than the risky publicly traded bonds. This if the U.S. economy stumbles, so if the U.S. does go into recession. That's not all, though. More than 40% said private credit is most likely to perform best in credit over the next 12 months, and that's despite a majority also predicting weaker returns and lower quality in direct loans as competition between lenders intensifies. Well, I want to focus on that competition between lenders intensifying, at least at the beginning of our conversation with Christina Paget. Curious what she has to say about all of this. She's head of leverage finance research and analytics for Moody's Investor Service. She joins us once again from New York. Christina, good to have you back. How are you?
I'm good, thank you.
Well, thanks for joining us on this. So I wanted to start on the idea of weaker returns and lower quality when it comes to direct loans, because back in the fall, late summer, fall, your team wrote about a so-called, quote, race to the bottom as a result of competition between banks and direct lenders, likely resulting in more defaults as riskier debt deals get done. Have we seen that at all play out, in your opinion, over the last few months?
Well, I think the first part of the story has emerged. So in 2023, we really saw most risky deals just go directly to the private credit entities. You know, and the public sector deals really remained on the sidelines as investors really didn't show a large degree of interest in the riskier part of the rating spectrum. So what we've seen in January and again in February were deals that had gone to the direct lenders coming back to the syndicated loan market as I think investor optimism improved, the belief that rates are probably going lower. So the syndicated loan market is decidedly cheaper. And so that's the primary motivation. And so we did see deals come back to this market. And I think fundamentally behind that story will be a tightening in spreads for both markets as they compete. But the other thing that we generally see when competition intensifies is terms get worse for the creditor. In other words, the loan agreements get much more flexible, much more favorable to the borrower. And the borrower in this case is primarily a private equity-backed LBO.
So, Christina, that might be good for the borrower, but not as good for the lender. And if you're the lender, how do you know that many more private credit firms, many more banks are not chasing risk at their own expense?
How do you know that they're not chasing it at their own expense?
Yeah, how do you know that they're not diving into riskier and riskier deals to chase some return here?
I mean, I think that's what we will see right now as a consequence as we see riskier deals coming to market. I would still say that the most risky deals really still primarily go to the direct lenders. So that's where you have really the least visibility.
Do you think that the market needs to be more transparent, right? I mean, this is a market that really it's not as publicly available to see when things are going south in private deals. Would you recommend that this market does become more transparent over time?
I mean, I think that is generally speaking where you get a better sense of what's going on in the market, and you can prepare yourself for a variety of outcomes. And this market is particularly opaque. Not small part of the market is comprised of the business development corps or the BDCs. They are less opaque than other parts of the market in that they do report the loans on their books, but they don't have the same obligations as a bank has, for example, where there is actually prudential oversight as well. The regulatory burden is much different. It is a much more lightly regulated part of the overall financial market, and it doesn't allow for as much preparation for some more consequential dynamics that could happen if the economy weakens, if the rate market changed materially. At the moment, I think everybody feels pretty good about where leverage is going from the perspective of a lower rate environment. It tends to be supportive, and 23 and 22 were pretty painful for highly leveraged entities as rates just went up pretty dramatically over a relatively short period of time.
Well, speaking of lending, I do want to jump in with Redhead crossing the Bloomberg terminal. Banks stuck with X debt, this is the company formerly known as Twitter, held refinancing talks with Elon Musk. A bank group spearheaded by Morgan Stanley held discussions with Elon Musk and his team about refinancing a roughly $12.5 billion debt package that supported the tech billionaire's take private of the social media platform X. This according to people with knowledge of the matter.
Yeah, it's interesting, Tim. The parties discussed options that could reduce the cost of the debt to make it less risky for the banks to hold. The talks had faltered earlier this year. Christina, it's interesting.
It's kind of a perfect segue.
It is a perfect segue. Christina, we're talking a lot about why these banks are able to really reopen the leveraged finance markets, and it's because they're not held with as much hung debt as they were, say, a year or so ago. Are there lessons learned about the financings that were done in this era where people were kind of fast and loose? Are there kinds of companies that you think either banks or private credit lenders will be wary of financing at this point in time?
I think in general, you can say that, if you looked at 2021, everybody was very optimistic, rates were low. The expectation was actually for the economy to be strong. So while there was a lot of risk taking that went on, and that's where a lot of the hung deals came from, it was kind of hard to anticipate where rates were going with the war in Ukraine, the impact of supply constraints. There were a lot of exogenous events that would have been fairly hard to anticipate. But I think that's why what you see among the banks are a certain kind of prudential regulation, right? To sort of limit the amount of exposure they might have to riskier credits. And I guess the converse is true among the private credit direct lenders, right? They have less constraints and they have different ways of addressing that risk. They have a different relationship with the borrower than you do in the syndicated loan market, where the relationships tend to be closer. There tend to be fewer lenders, and negotiating is different and perhaps one could argue more efficient. But I think there will always be periods of generous lending and then regret.
Right.
I don't think that's really going away. And I think that's why we look to certain kinds of constraints on that behavior. The BDCs do have limitations on leverage. And that does prevent some ultimate risk in terms of how much they're willing to take on in any particular case.
Well, Christina, this is why we love checking in with you every few months. You give us an update on what you guys over at Moody's and Investor Services are looking at when it comes to private credit. That's Christina Paget, Head of Leverage Finance Research and Analytics for Moody's Investor Service. This is Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The drug maker Perrigo has set the price for the first over-the-counter oral birth control in the U.S. Opill, as it's known, will hit the shelves of major retailers and pharmacies with a suggested monthly retail price of $19.99. Regulators cleared Opill for non-prescription use last summer, joining more than 100 countries where the pill is available without barriers such as a physician appointment or approval from
Paul from the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision, that's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Important decision were very well crafted, and I think it will go a long way toward bringing our country together, which our country needs.
Trump says the justices rightly believed you cannot take somebody out of a race. The justices said the decision to ban an insurrectionist from running for office should be left up to Congress, not the states. 22-year-old Jack Teixeira today pleaded guilty to 6 counts of willful retention and transmission of national defense information. The Massachusetts Air National Guardsman was arrested for posting highly classified military intelligence to Discord, a social media platform. Matt Olson is Assistant Attorney General with the Department of Justice.
Mr. Teixeira callously disregarded the national security of the United States, and he betrayed his solemn oath to defend the country and the trust of the American people that he swore to protect.
Olson says this case demonstrates the gravity of keeping classified information secret. Teixeira has agreed to accept a 16-year prison term. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Nancy Lyons. This is Bloomberg. Now back to you, Tim and Shanali.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Well, I promised that we'd talk about Shanali Basic's among her most recent pieces. It's in Bloomberg Business Week, the next issue of Bloomberg Business Week. And Shanali, it's all about Carlyle's sustainability head pushing PE firms to share data.
This woman in her early 30s got all the private equity rivals to share data anonymously. A pool of $4 trillion in assets has become a pool of $28 trillion in assets in a number of years. All these firms sharing data to try to make their industry more sustainable. You don't see that in public markets.
No, we're talking about Meg Starr, and she grew up in Cape Cod and has a really interesting backstory. Check out this story. It's available on the Bloomberg Terminal and at bloomberg.com/businessweek. One more story we want to get to is about challenges that Coinbase is experiencing. It's the biggest U.S. crypto exchange. Some individual investors saw zero balances in their accounts for the second time in less than a week. You brought this to my attention. I was like, Wait, again? Because this happened last week.
I think this is fascinating. So remember, you have Bitcoin less than $2,000 away from a record high. It is soaring more than 7% today. Coinbase, for the second time in the week, has users seeing zero balances. Interesting, though, this time, last time you saw it happen, Coinbase's stock kind of wavered. This time, Coinbase's stock is still soaring. You have people completely brushing the issue off because a lot of these glitches have been happening because of these record level volumes you've been seeing.
And shares of Coinbase up by 14% on the day today.
Incredible. And as you're saying, a lot of interest around cryptocurrencies in and of itself. Inopportune time to not be able to know what's in your Coinbase account.
Well, that is going to do it for us on Bloomberg TV. But if you are sticking around on radio, we're going to have a great conversation over the next 2 hours because some people call him Sparky, other people call him the Commodore. We're going to be joined by the president of the Princeton University Investment Company, who's retiring after nearly 30 years and growing the endowment nearly tenfold. Also, Whole Foods Market is going small. What you need to know about the new Whole Foods Market Daily Shop, that's from the Executive Vice President of Growth and Development at Whole Foods Market and Amazon. And I promised we'd talk about some robots because Amazon is testing out some 5-foot 9-inch robots. They walk like a bird. They've got glowing white eyes. They're called Digit, and it could be the future of work. All that and more up over the next 2 hours on Bloomberg Business Week. Bloomberg TV, the close starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Happy Monday, everyone. It's March 4th, 2024. I'm Tim Stenevec. That is Shonali Bassick in for Carol Masser this afternoon. Shonali, we're seeing stocks just hovering around their close to best levels of the day. The S&P 500 up more than 0.2%.
And it doesn't sound like a lot, but we know that 0.2% can yield a new record if we keep up the gains.
If it's green,
it's
green, it's going to be the 16th record close of the S&P 500 just this year. Live from the Bloomberg Interactive Broker Studio, we are streaming on YouTube and on Bloomberg Originals. In just a few minutes, we're going to be joined by the president of Princeton University's investment company, who's retiring after nearly 30 years and growing the endowment nearly tenfold. Also, we're talking Whole Foods this afternoon.
We sure are. There are new locations opening, but they're not like the new locations that you have heard about before. We will get a little bit of a preview and what to expect in the new Whole Food, let's call it.
Also, it's 5 foot 9 inches. It walks like a bird. It's got glowing white eyes. It's called Digit, and it's a robot that could be the future of work. My question, can it be programmed to love?
Oh, man, that's deep.
No, it can't. It's just all it does is lift boxes, at least at this point. We're also going to talk venture debt with Runway Growth Capital's David Sprang. That happening over the next 2 hours. First up, though, check on the day's trade and top business stories. Here's Charlie Pellett.
Hi, thank you very much, Tim. And as we move into the final hour of trading here, we do have the Dow Jones Industrial Average trading lower by 22 points, drop there of just about 1/10%. But if it is green, another record to be seen. We have got the S&P up by 8, gain there of about 0.2%. NASDAQ, little change, swinging between gains and losses. We got the NASDAQ Composite Index up now by 1 point. 10-year yield, 4.21% with a 2-year that's yielding 4.60%. Spot gold up $34 the ounce to $21.16, a gain there of 1.6%. Bitcoin now surging by 7.1%. Bitcoin at 67,325, while we're looking at West Texas Intermediate crude retreating now by 1.4%, 78.85 for a barrel of WTI. Bottom line, stocks are trading mixed. S&P looking at another record potentially. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets, and she told us this morning there are reasons to be bullish on stocks as the rally widens.
What we do see is if you look at it from a PE perspective, the top 10 or the top 5 stocks are getting to levels that have marked peaks in the recent past, but the rest of the market still has a lot of room to run. And I think one of the things that's going to fuel rotation in the market away from those big stocks back to everything else is this idea that GDP expectations continue to improve, which should narrow the earnings advantage of those big names.
And the Russell 2000 right now up by 0.4%. By the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Apple has been hit with a $2 billion penalty from the European Union over an investigation into allegations it shut out its music streaming rivals, including Spotify. Apple right now down 2.4%. Recapping, stocks are trading mixed. The Dow lower, S&P right now higher by 9. It is up 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Well, he grew Princeton's endowment nearly tenfold over his almost 30-year tenure, from $3.5 billion to $34 billion, generating an average annual return of 10.5% over the past two decades, I should say. The recent years have been a bit challenging. It is an important fund, of course. Earnings provide roughly 2/3 of Princeton's operating revenue and 70% of the undergraduate financial aid budget. Princeton is the richest U.S. university when measured by endowment per student. Those are all tidbits from a recent profile of Andrew Golden, president of the Princeton University Investment Company. That profile courtesy of Bloomberg News higher education finance reporter Janet Lauren. We're lucky to have with us both of them this afternoon, Janet and Andrew, here in the Bloomberg Interactive Brokers studio. Good to have you with us. Andrew, I want to start with you. How are you?
I am groovy. Thank you very much.
Groovy. You got a few more months until you officially hang up your hat. We got to ask you, though, before we get into your history at Princeton, Shanala reminding me that if we close in the green today, we're 16 records for the S&P 500 just so far this year.
I had nothing to do with that.
Well, talk to us a little bit about how you see this market. Is it a market that's has too much concentration in tech? Is it a market where things have moved too quickly, too fast? Are you seeing froth? What are your impressions?
Well, I want to emphasize that whatever I see in the market at any one given point in time really doesn't influence how we invest. So I'm not particularly good at making predictions. In terms of just evaluations, yes, valuations seem quite high. May be the case that for some companies that's justified, but it's not clear that that would be true across the board. So I sleep a little less well than normal.
How well? Okay, so a little less well than normal. I think it's fair to say that that's a market take from somebody, so I appreciate that. Janet, I want to broaden out the conversation a little bit and just give us an idea of how all this got on your radar. As higher education finance reporter, I mean, you cover the performance of endowments. It's a big deal that somebody like Andrew, who's been there for close to 3 decades, is leaving.
Yes, and I have to say, my colleague Joe Misek pointed out this very funny mention in a bond offering document, which is a very staid document. And Joe emailed me and said, what is going on here? Because the bond offering, which Andy can talk about in a little bit, mentioned some of Andy's nicknames, that he goes by Sparky and the Commodore. And I said, this would be a great time to write about his retirement after almost 30 years. So I'd like to start with, what did the endowment look like when you came in 1995? Was it mostly stocks that were directly held, bonds? And how did you go about to change this program that produced such spectacular returns?
Princeton was in the early days of diversifying the program. So it was mostly stocks and bonds, but the chair of Princo had articulated a few years prior 3 initiatives that meant more private investing, more engagement in hedge funds, and a less successful program that was originally called Global Balance Management, giving trusted advisors very large blocks of money and say, do what you will, invest all over the world. So it was definitely making progress there. It was funny, the governance was different, that we had to bring every major decision to the chair, to Dick Fisher, who had this day job as being CEO of Morgan Stanley. And so my early years was to work on changing that governance so that we could have a much more complicated roster to invest with the world's best investors pursuing niche strategies and to create that broadly diversified program.
Andrew, what is the art of choosing fund managers here? You know, you look today and it's like every private equity firm, every private credit firm, and every hedge fund is holding their own investors to a different metric. So how do you kind of parse through the noise?
Yeah, well, it's a great question, and it is mostly art. I like to describe myself as a recovering quant, and that means that I understand just what the limitations are of just
That's so nice on failed quant.
These are not mutually exclusive. There's a reason why I'm in recovery. That assessment of who's going to be a great partner is really critical, and it is art. When I make my pitch to recruit Prince's best and brightest and others to come join us, I say, this is one of those 10,000-hour things that it's going to take you a long time to learn, but in some sense you already know. It's the equivalent of saying, who do I want in my study group? Who do I want to partner with? People have written books about this. I would say the underappreciated element of this is what I call seeking an alignment of appetites. That sounds like alignment of interest, but interest can be contracted. Appetites are those natural things. What is motivating someone to come to work every day, work hard, and try? Is it to be the very best at what they do, or is it simply to make themselves as rich as possible?
Andrew, remind us of what the asset allocation is right now, roughly.
Well, our mission is to produce very high returns forever and to beat inflation, so it has to be quite aggressive. We have just 8% as our long-term target to our fixed income portfolio. Interestingly, we have a relatively small portion in traditional, call it a dozen points, in traditional long-only accounts in developed markets, a similar-sized amount in emerging markets. We have a good bit in what we call independent return, which is a subset of what the world calls hedge funds. These are managers who are given a little bit broader license to invest in ways that we think will produce high equity-like returns, but without so much dependence on market movements in most environments. So if you short out some stocks, then you're reducing your equity beta. The big gorilla, of course, is our private equity program, which is in the high 30% range, and a smaller amount in real assets. Across the board, we're just trying to invest where we think we have a competitive advantage.
And can you talk about that venture capital portfolio? I think there was one year that it had like a 100% return, if I'm remembering correctly. And where do you go from here in terms of what are you looking for in new managers?
Well, we're very excited, particularly in venture capital, about finding new managers because it's an industry that needs to refresh itself. As you well know, a big emphasis for us has been to really expand our networks as to how we find those managers, which is motivated by and actually has resulted in a much greater amount of diversity in terms of the individuals who are running our program. And we're doing that simply because we think we can make more money if we're tapping previously under-tapped sources of talent. That gives us an advantage. Of course, in trying to deal with the issues of investing, bringing multiple ways of thinking to the table creates a huge advantage. So what we're looking for in venture capital generally can be summarized as, because venture capitalists have to convince the investments to allow them to invest, we're looking for people that are not just smart, not just hardworking, but have that special quality of folks are going to root for their success.
So can you talk a little bit about the bonds, since we're here because of the bond issuance? We found that fun little tidbit. What are these bonds funding? And you can talk a little bit about spending money at Princeton.
Right. We have a very ambitious capital plan. We feel that we owe it to society to do as much as we can within our area of expertise. And that capital plan includes simply an expansion, doing more of what we've always done, bringing more students, but it also means keeping up in areas like engineering, which obviously there's new things to research and to teach in that area, and it seems that critical for future leaders, which we hope we're trading, to have some exposure to that. So at the same time as while we're funding additional space in engineering, we also, I think you said that you were on campus recently, we have this amazingly ambitious and amazing art museum project. So the whole idea is to just really allow for folks to have a full range of understanding human knowledge and wisdom in a very diversified way.
Hey, speaking of human knowledge and wisdom, you worked under the legendary David Swensen at Yale. Shanali, I don't know about you, but Shanali and I went to different business schools, but I think this was the first case study that I did in business school was the Yale Endowment. What did you learn from David Swensen, and how did you bring it to Princeton?
You know, David was very good at teaching all of us the importance of first principle thinking, and that gave him the wherewithal to plow ahead even when it was against conventional wisdom. So I think I learned a lot from just that idea of do whatever you think is the right thing, subject to the constraint that you won't get completely run over for attempting to do it. And I mention the word completely because, you know, David did not shy away from any challenge.
Well, so on that note, too, we were talking about first principles. We were talking about the 10,000 hours, you know, so many rules of thumb. When you kind of look around the investment community these days, what are some things that you think have become flyaway behaviors? You know, are there things that, you know, you would advise have become normal ways of thinking in the markets these days that maybe shouldn't be?
Well, again, going back to Dave, you know, he wrote the second book on basically don't try this at home, right?
Even if there's a case study.
And now everybody is trying this at home.
Even if there's a case study, don't try it at home.
Right, and so I think, you know, there's a whole slew of things that people are doing because Yale and Princeton and MIT and others are doing it, but they don't have the staffs, and they don't importantly have the governance structure. There's an old saying that good clients make for good architects, and it's true that good bosses make for good investment officers. So to be blessed with a board and a entire governance chain that actually comprises sophisticated investors and understand that Mama's warning. Mama said there'd be days like this when things don't exactly work out the way you would hope, and to have that sympathetic view and to get into the quality of analysis as opposed to saying, well, you know, we're just going to do whatever, you know, has outperformed over the last several years.
A question to Janet's great reporting here also. We were talking about the reason for the bond. Why did a bond document need so many personal details about you?
Look, I think the answer is that the personal details are so compelling. The market demanded it. I mean, I know the bond's priced very, very well, and I'd like to believe it was because of that extra details that give a sense of just how the sausage was getting made in terms of the stewardship.
Well, it is great fodder for Janet.
Right. Well, and of course, that endowment performance does signal a strength to bond investors. But, you know, looking back at 30 years, what has made you the most proudest in terms of the investments and also, you know, how the money has been spent?
Yeah, I think it's actually how the money has been spent is the most important one to focus on. You know, early on, I think I'd been here about 3-4 years, and Princeton announced its first major step up in financial aid, which was not just about undergraduate aid, but making our graduate students' life much better. My son was on the playground when his best friend, whose father was an important professor at Princeton, came up to him and said, "My dad says that your dad's a hero," right? So that was a proud just ego moment. but I think our leadership on things like financial aid and in better access, and importantly, better support for the students who do come here, so that the graduation rates are what they are. On the investment front, it's a thousand little things, and I would say, as opposed to it being something that you could write in your story about, how I remember looking out my window and thinking about the problem. It's more knowing that I've connected with people on my team, and knowing that I've connected with our partners.
Hey, that is with us right now. Very pleased to have Andrew Golden, president of Princeton University Investment Company, and higher education finance reporter Janet Lauren. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:21 right now on Wall Street. We are looking at a day in which U.S. stocks continue to trade mixed. We have got the Dow Jones Industrial Average lower right now by 39 points, down by about 0.1%. S&P 500 Index up 8, a gain of 0.2%. NASDAQ swinging between gains and losses. Right now we got the NASDAQ Composite Index, little change. NASDAQ higher by less than 0.1%. Stocks are losing traction as traders await this week's batch of jobs data, along with remarks from Fed officials for clues about the outlook for interest rates. 10-year yield right now at 4.22% with a 2-year that's yielding 4.61%. Spot gold up 1.6%, 21.16 the ounce, while West Texas Intermediate crude down 0.9%, 82.82 a barrel. That is Brent. West Texas 78.76 a barrel. Bitcoin, big story today, surging 7.1%. Bitcoin now at 67,284 on Bitcoin. Indeed, busy week for economic data. Jobs report Friday, Capitol Hill testimony Wednesday from Fed Chair Jay Powell. As for the Federal Reserve, Lori Hanel is Global Chief Investment Officer at State Street Global Advisors.
We believe that the Fed is already a bit behind the curve. In fact, we're thinking that they should start cutting, if not in March, certainly by June. And part of that is that despite the fact that the U.S. seems incredibly resilient, there are signs of weakness that are starting to emerge. And beyond that, we don't think that a 5+% interest rate is consistent with an economy that's likely to be growing closer to trend.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. American Airlines has agreed to buy 260 short-haul aircraft that include a massive deal for Boeing 737 MAX jets, a key endorsement of the plane maker as it works through a crisis of confidence following that near-catastrophic accident back in January. American down 4.2% today. Boeing right now up by 0.5%. Again, recapping, stocks are mixed with the Dow Industrials down 0.1%. S&P holding on to a gain of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Whole Foods Market is going small. The Amazon-owned grocer is opening new small-format stores aimed at serving quick-trip urban consumers. You've heard this throughout the day from Charlie Pellet. It's called Whole Foods Market Daily Shop. The stores will range between 7,000 to 14,000 square feet. So to put that in perspective, a typical Whole Foods store averages about 40,000 square feet. So pretty small compared to a typical store. The Daily Shop is also going to offer similar but slimmer assortment of products, ranging from fresh produce and frozen food to prepackaged meals in the 365 branded products, but they will not have buffet bars or meat counters. For more, we go to Christina Minardi, Executive Vice President of Growth and Development at Whole Foods Market and Amazon. She joins us here in the Bloomberg Interactive Brokers studio. Christina, how are you?
I'm great. Thank you for having me today.
Well, thanks so much for joining us. So I remember this is not the first time that Amazon has experimented with Whole Foods going smaller, or even Whole Foods has experimented with it. So back in 2016, Whole Foods opened smaller stores called 365 by Whole Foods Market. If consumers remember that, how is this different?
Well, thank you for bringing that one up. The 365 store was actually before Amazon acquired us. And it was a time when we really needed to work on our value image prior to Amazon. And, we learned a lot from the 365. We did close them, and not close them, but we converted them over to Whole Foods Market
So
stores.
you made them like the main Whole Foods?
Yeah, into 2019. And this one's a little different because the 365 stores were 25,000 square feet.
Oh, so they're bigger.
Yeah, so this is smaller. The idea around Whole Foods Market Daily Shop is really for a convenient shop. If we learned one thing over the last few years, as you were saying earlier, you love home shopping, you love it being delivered to your house. People want things quickly. So we envision for Daily Shop is our customers will still shop our regular stores here in Manhattan, but they'll have another avenue to shop Whole Foods Market that's quick and easy. If you want to come in and you need to get something just for dinner tonight, or you're going to have a dinner party, we'll have all of the items that you need.
What's the difference, right? I'm one of those shoppers that I go into a Whole Foods or my local grocery stores to look at all the cheeses and find a new jam, and I do it for fun, and it's my therapy. And so
bring me some cheese and jam, Shonali.
Come over anytime, Tim. The fridge is stocked always, sometimes too stocked. Christina, what can't you find at these places if you're one of those people that likes to explore?
Yeah, everything you just mentioned, you'll be able to find in Daily Shop. The difference is how we're delivering it to the customer. So when you go into a typical Whole Foods, we'll have a full-service meat counter. This store will have the same selection of meat. It just won't be in the counter. It's how we're delivering it. It's packaged. We're still going to have all of our beautiful cheese, and my refrigerator is the same, lots of cheese. So we'll still have the same selection, but it'll be wrapped and ready to go. Again, quick in, quick out. That's the idea behind it.
So Amazon has owned Whole Foods for a number of years at this point, and I think people in Manhattan will be familiar with the Amazon Go stores. Is there any sort of relationship or like learnings that you took from what Amazon brought to Amazon Go in terms of technology, in terms of consumer habits that you then brought over to this version of Whole Foods?
Well, the Amazon Go stores, we have them in different cities, and they're significantly smaller. They're only about 2,500 square feet. But, that's what I love so much about Whole Foods Market and Amazon. We all learn from each other. And, we lean on Amazon, obviously, for technology. Like the store is going to have Amazon Palm, which is
Whole
super
Foods has
easy.
that. Some Whole Foods that I go to have
All the
this.
Whole Foods have it now.
Okay.
And we will have it, obviously, in Daily Shop. So we really learn from each other. And, just like we did a deep dive on the 365 concept as we were developing this concept, we've worked closely with the Amazon Go team. So we are constantly learning, and we really lean on them for help.
But not
with technology.
cashierless technology at this point.
No, we'll not have JWO, at least the first couple of stores. We'll have self-checkout, we'll have a manned register, and then we'll also have the Palm.
Do you envision it ever having this technology? You know what? I ran into this technology at a ski mountain recently. And I think it was actually it might have been actually Amazon technology.
Yeah, you're finding more and more of it now.
But do you envision like a 7,000 to 14,000 square foot store having this tech?
It could be possible for the first few. We're not. We really want to concentrate on how we're displaying the product. We have a little more freedom when you don't have JWO in a store of how abundant. And that's the thing about Daily Shop when we design this store. We use some new designers. And every place that you turn, you're going to see product. I mean, we really used every inch of the space to really just celebrate food. So you'll definitely find your cheeses.
I just want to say, I don't know what JWO is, but I imagine it's...
Just walk out.
Just walk out, okay. Okay, so it's
go.
like, some
got
places,
it.
some airports have it now, you
Yes.
walk in and you leave and you still get charged, so you're not stealing it.
Let's take a step back for a second, because what was the demand you felt that you were meeting here? Is there a reason, was there a trend among shoppers that you saw that you said, hey, this would work?
Yeah, I think you said what I said earlier is convenience. I have a very good friend of mine who's lived in the city most of her life. She lives 14 blocks away from the store right down the street, 57th Street store. She won't shop there because it's 14 blocks away. But she loves Whole Foods. So, yes, she can get delivery, but if she wants to experience, like you said, have that experience while you're going to the store, we're going to pop these in between Whole Foods stores, and you'll be able to experience Whole Foods in a convenient way.
But is that stores being busier? Is it New Yorkers being lazier, right? What is driving them to want more convenience when you can already get your food delivered?
Having delivery, I think, is great for a good segment of our customers. But like you said earlier, you love shopping our stores. What we find with our customers is they use delivery and they shop our stores. So this is just going to give them another avenue to shop our stores in a convenient way.
Talk to us a little bit about this relationship that Amazon has had. Critics have said that Amazon has not figured out retail yet, which is pretty remarkable given, or physical retail, I should say, pretty remarkable given their footprint. And they haven't really figured out like the Whole Foods identity and how they work that in. You've been at Whole Foods for, well, since the 1990s at this point. So you've seen many different iterations of it. How would you respond to that if critics said that?
It's been a wonderful partnership. It really has. Again, to lean on the technology that Amazon has, the discipline in running your business, the processes, that's been really great. And I think now the competition, people like myself, where I'm overseeing Amazon teams and Whole Foods Market teams. So bringing those teams together, we've had just really good results. You have 40 years of retail on the Whole Food side, and then you have all this experience of Amazon. We're going to win in grocery. We're going to be a world-class grocer for each of the segments, whether it's a conventional shopper or a Whole Foods Market shopper. Amazon, we're going to win in grocery.
What do you think is kind of the thing that New Yorkers will like most about this, and how do you see it expanding onto other cities? I mean, does this only work for really big cities?
That's a good question.
For right now, we're going to concentrate on cities. Obviously, New York, we've been very successful here. But we've done a lot of work the last few years in really trying to realize what's the right size store for the market, even if we're looking at a suburban store. Is it a 40,000? Is it a 25,000? So we've got a great science team on the Amazon team that's helping us figure that out. So we're making really good real estate decisions.
Does it work if people have cars, or is this a store concept for people who aren't driving?
No, I think it can definitely be both. Like I said, we're concentrating on the cities right now, but I envision again that we could have stores like this even in suburban areas,
Now,
suburban dense areas.
Suburban dense areas. If you think about it, does it allow you to somehow open more stores because you can open smaller ones?
Yeah, absolutely. I mean, finding a real estate box that's, 7,000 or 8,000 square feet as opposed to 50,000 square feet, we can move a lot quicker with our growth with these stores.
Nashville, upstate New York. What do we think, Tim?
Hey, as long as we can do Bloomberg Radio from there, then I'm good. Hey, I really appreciate you coming by, Christina. Thanks so much. That's Christina Minardi, Executive Vice President of Growth and Development at Whole Foods Market and Amazon, talking about the new Whole Foods Market Daily Shop, the smaller footprint stores that are a fraction of the size of a typical Whole Foods. It is Bloomberg Business Week. We're seeing the S&P 500 up about 0.1%. Let's go to Washington, D.C. now for a check of the latest world and national news. Nancy Lyons is in the Bloomberg 991 newsroom in D.C. Hey, Nancy.
Hey, Tim. Israeli cabinet member Benny Gantz, a rival of Prime Minister Netanyahu, is meeting with Vice President Kamala Harris this afternoon. Harris spoke ahead of those discussions.
The president and I have been very clear that Israel has a right to defend itself, that we have got to make sure that innocent civilians aren't being killed, and that we've got to get these hostages out.
Joining Harris in her talks with Gantz is Secretary of State Antony Blinken and National Security Advisor Jake Sullivan. The United Nations today released the results of an investigation into the Hamas attack on October 7th, and it says there are reasonable grounds to conclude Hamas committed sexual violence during the attack. They've also received, quote, clear and convincing information that women and children held in captivity are being subjected to rape and torture right now. Former President Trump will remain on Colorado's ballot after a unanimous Supreme Court decision today. The case revolved around whether Trump could be banned under a rarely used constitutional provision barring insurrectionists from holding office. Bloomberg Law host June Grasso has more on today's ruling.
What they base it on is that the states don't have the power under the Constitution to enforce Section 3 of the 14th Amendment, which is the section that this was under. And so that's with respect to federal officers, especially the presidency.
Bloomberg's June Grasso says the court believes it's up to Congress, not the courts, to determine who should be disqualified for being an insurrectionist. A massive wildfire that's grown to become the largest in Texas history may have been started by a fallen utility pole. That's according to a number of lawsuits and property insurance claims. The utility that serves the Texas Panhandle is being ordered to preserve what's left of that utility pole. One of the negligent suits claims Xcel Energy failed to inspect and repair the equipment. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
From Bloomberg World headquarters, I'm Charlie Pellet. 340 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P holding on to a gain. Little change right now. Both the Dow and NASDAQ are in the red. But let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Main U.S. averages are quiet today, with the Dow currently down 58 points. Like you said, S&Ps are trading higher by 4, and NASDAQ is lower by 23. The U.S. 10-year yield at 4.22%. Gold is up 33, but oil is slumping, and Bitcoin is higher by another 7%, topping 67,000. Among the main 11 S&P sectors, leaders were utilities and real estate. Telecom and energy were under pressure, and leaders to the upside in the Dow, Intel and IBM, while Merck and Apple led to the downside. In other news, MicroStrategy gained as much as 25% to its highest level since 2000, and NVIDIA hit another record high. Among the banks, NYCB fell another 20% after Friday's 26% plunge. And wrapping things up, GitLab reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yeah, it is that time to drive to the close. We're just about 18 minutes to the close of trading on this Monday afternoon. Let's go to Sam Stovall, Chief Investment Strategist at CFRA. He joins us from Allentown, Pennsylvania. Sam, good to see you. How are you?
Doing well. Thank you, Tim.
Yeah, thanks for coming back with us. Hey, I'm going to ask you the question I've been asking people all afternoon as we get ready to perhaps notch a 16th all-time high in the S&P 500 if things continue on this path. Are you starting to see any froth out there, Sam?
Well, I certainly feel the froth, knowing that whenever we have recovered everything that we lost from the prior bear market, the market does tend to stumble along for another 5% or so before dropping from exhaustion. And we're at that point right now where I think that we could end up digesting some of the recent gains, but I'm encouraged by the fact that we have never fallen back into a new bear market after recovering what we lost in the prior one.
You think about just how few stocks have driven this market to 15 all-time highs, and you have to wonder
just this year.
And you wonder about putting new money to work and whether they should be in those concentrated names or whether you start to pick on either beaten down sectors or areas that have been less loved. How do you feel about it, Sam?
Well, when I think back to the market's advance going back to October 27th, when we had the recent low, S&P 500 is up 25%. But we've had 90% of the stocks in the S&P in positive territory and 45% of them beating the market. So it's not as narrow, I would say, as a lot of people would anticipate. Yes, a lot of the bigger gains have come from those behemoths, a small number of behemoths, but there are an awful lot of companies. We're looking now at about 2/3 of the 153 sub-industries in the S&P 1500 that are above both their 10-week or 50-day as well as their 200-day moving averages. So again, I would say that a rising tide certainly is lifting a majority of boats.
Hey, Sam, you got an interesting note out about what happens in the rest of the year after January and February saw gains. Talk to us a little bit about the technicals here.
Well, the S&P gained in both January and February, and normally February is actually a pretty weak month. It's actually the second worst month of the year, second only to September. But in the 29 times since World War II that we had both of those both of those months in positive territory, we were higher for the entire year 100% of the time on a total return basis. We were essentially flat in 2011. But then if we think about, well, what about the remainder of the year? The S&P gained an average of about 12.5% with 93% frequency of advance, or in other words, only twice did the market fall in that 10-month period, but 27 times it rose. So certainly not a guarantee, but an encouraging statistic.
Sam, how do you think about the interest rate equation as it pertains to the stock market these days? Because you think about even just the week ahead, we have hours worth of testimony to Congress from Fed Chair Powell. We have a critical jobs report coming up. And should equity investors be a little concerned about the volatility we're still seeing in the bond market and the uncertainty around what the Fed does?
Well, I think the market is coming to terms with the fact that the Fed will likely be slower to lower interest rates, meaning that they will probably have their first rate cut in June, which is interesting because historically, going back to the late 1980s, it's taken about 11 months between the last rate hike and the first rate cut, which would be exactly on target this time as well. We also think that 25 basis point cuts will occur in the third quarter and fourth quarters. So a late start and then only 3 cuts this year, but more to follow in 2025. So if we end up seeing employment data that come in higher than anticipated, I think that could cause a bit of concern because that could give the Fed reason to start their rate cuts in the third quarter rather than the second quarter.
Okay, so if employment data comes in a little hotter than expected, that's a concern. What else out there concerns you? What keeps you up at night, if anything?
Well, I would say that what keeps me up is why have small caps not really done all that well, especially since they're trading at about a 32% discount to their average relative PE going back 20 years. Mid caps are at a 25% discount. The S&P 500 is trading at a 30% premium to its own PE over the last 20 years. So I'm waiting for the mid and small caps to do well, and I think that is a function of how confident investors are likely to become as the Fed does start to cut interest rates.
I think it's because the Mag 7 are not small caps or mid caps. I think that's the issue. I can answer the question, right?
Absolutely right. Yes, yes.
Yeah, I mean, but they started out. They did start out as, a long time ago. Before they were oak trees, they were acorns, and I guess everyone's just waiting for the other ones of those.
Hey, it's interesting, Sam. While he's talking about the acorns too, we've been talking so much about the Mag 7 and how well they've done. But if you think that inflation is still going to be hot, if you think that the economy is still running hot, you kind of painted this picture of employment being hotter than expected, maybe interest rates still high. What doesn't do well in that environment?
Well, in a rising interest rate environment, it would, or a hotter environment, it would be the groups that are doing well now: technology, financials, consumer discretionary. Because if the worry is that we are staying higher for longer and therefore heightening the risk of recession, which we do not see, then that would certainly affect those higher PE stocks at this point. Semiconductors, which are up more than 75% since the October low. They were also up more than 100% in 2023. I think certainly they could be vulnerable if it looks as if the Fed will certainly take longer. But we're still sticking with the fact that year on year, we're likely to see the core PCE come in at around 2.7, 2.6% for this year, at 2% next year. So we're heading in the right direction. Maybe the speed is something that still is under debate.
What about 3 rate cuts this year, just in the last 30 seconds that we have? Is that what you see happening?
Yes. That's what I see happening. 3 rate cuts this year, 2 more in the first half of 25.
All right. Really appreciate you joining us, Sam. Always good to catch up with you. Sam Stovall is Chief Investment Strategist at CFRA, joining us from Allentown, Pennsylvania. Shonali, as we get ready to go to our friends at Bloomberg TV for our Beyond the Bell coverage, our simulcast, we are seeing the S&P 500 actually lose a little steam at the end of the day, down now by about 0.1%. The NASDAQ composite down 0.4%. The Dow down 0.2%.
Day's not over, Tim.
Ah, there it is. she's ever the optimist. She wants to see 16 here.
I do, and Bitcoin also near those record highs. So it's not all bad out there, even if it isn't all records.
It is Bloomberg Business Week. That's Shonali Bassick in for Carol Master. I'm Tim Stenovec, and this is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. American Airlines has agreed to buy 260 short-haul aircraft that will include a massive deal for Boeing's 737 MAX jets, a key endorsement of the plane maker as it works through a crisis of confidence following that near-catastrophic accident in January. It is the first major deal for Boeing's marquee 737 MAX since the issue on an airborne Alaska Airlines jet earlier this year left the plane maker in crisis. Boeing shares, they're up by 0.3%. American Airlines shares lower by 5.2%. JetBlue Airways has formally abandoned its pursuit of Spirit more than a month after a federal judge blocked the $3.8 billion acquisition on antitrust grounds. The carriers say they reached an agreement to walk away after determining that required legal and regulatory approvals were likely to be met by dates specified in the deal. Unlikely to be met, I should say. JetBlue shares today, they're up 3.8%. Spirit down 10.5%. Arkhouse Management and Brigade Capital have boosted their offer for Macy's by 14% after the retailer turned down a previous proposal. So if the deal does happen, where will this wind up leaving Macy's? Susharita Kodali is Vice President for e-business at Forrester Research.
Typically, the playbook when there is an acquisition of this sort is that usually the assets are harvested and there is essentially a slow decline in the retailer. And the biggest assets here are really the real estate properties. What's going to happen with that Herald Square store and other assets that they may have that are physical bricks and mortar stores. So that's really the question.
And those are our top company stories at this hour. And this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week on this Monday afternoon. Just a few minutes to go until the close of equity trading here in the U.S. I'm here with Shonali Basak in for Carol Messer this afternoon. And Shonali's been mentioning the price of Bitcoin approaching records once again. It's like it's 2021 all over again, Shonali. Now, speaking of that, we're talking about meme coins again. What does this mean?
It means that when people are looking at Bitcoin in and of itself, they're looking at pretty heroic gains. They are worried that maybe, you find more value outside of places that are not just Bitcoin, and maybe people are just having fun again in this industry.
Fun? I guess fun is when you make money, I guess, but we all know what happened last time after the meme coins kind of crashed. Believe it or not, and Muyao Shen has one of the most read stories on the Bloomberg terminal. Believe it or not, old favorites such as Dogecoin are actually outperforming Bitcoin. Well, the original digital asset approaches its peak price reached during the pandemic fueled rally that was more than 2 years ago. I also wonder what this means about if there's any sort of like sentiment signal here. If we're starting to see I think, people can make the case about Bitcoin. I still, as, Zeke Fox came on last week and talked about this with us, and he said, look, I looked for years for the reuse case for Bitcoin. I still haven't found it yet. But there is the supply-demand thing. When it comes to the other digital assets like the meme coins and stuff, I don't see how it works.
It's interesting. And again, you have to remember in these worlds, there's two things. One, if you're buying Bitcoin is already very large. But these meme coins, when you say they're getting larger increases, it's off of a much smaller price. And so, yes, the rise is huge. But again, it's easier to, if you're going from 1 to 2, it's a doubling, right? If you're going from 65,000 to 75,000, is just a couple percent.
That's a very good point. Check out this story by Muyao Shen on the Bloomberg terminal. Among the most read, it talks about Pepe the frog-themed coin. Dog with hat is how you say this. It's a dog pictured wearing a hat. They've been racking up fresh highs almost daily, according to the data tracker.
It's all about the community,
Gecko.
Tim. Leave the guys alone.
I'm sorry. No offense, dog with hat. I don't. Very, very cute coins. Coming up next, it's Countdown to the Close. Bloomberg's Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. And here to help take us beyond the bell. It's a global simulcast with Tim Stenovec, Shonali Basak in today for Carol Messer. Welcome to our audiences across all of our Bloomberg platforms here on this Monday afternoon, Tim, where we see a market really trying to digest those record highs from last week and looking ahead to a big week of catalysts.
Yeah, still a couple minutes left, but who knows if we're going to hit a 16th record high this year in the S&P 500. Looking like it's going to close in the green. I do want to talk about something we just chatted about on radio, guys. The era of the meme coin is back. Can you believe that?
No, I don't.
Tell
me more, Tim.
Okay, there's Pepe the dog, Pepe the frog-themed coin, and dog with hat. This is new to me. I'm just learning this from among the most read, Muyao Shen.
I think this is all just to say
coin,
it is certainly back.
Okay. Is that where we're at? Is this like the contrarian sell signal now?
That's what I'm thinking. This is like there's a sentiment indicator here, right?
So as soon as Bitcoin hits 69,000, what happens to all these other meme coins? That's the big question, right?
Can't believe it.
Well, not really, right? Because now you're waiting for that Ethereum ETF. And so if you think about it, perhaps exuberance can keep going because, even if interest rates stay higher, it has not popped the bubble of money going into these types of investments.
Yeah, it should be pointed out that on this day, you talk about the biggest movers. You got a lot of crypto stocks moving higher on the day. Coinbase up more than 10%. And of course, MicroStrategy, which does what MicroStrategy does, 23% here on the day. Happy Pepe coin day or whatever Tim that was talking about.
I just look at this and shake my head. Every single day it continues rising. And yeah, these proxies, beyond the fundamentals, what are the fundamentals of companies like that, right?
More the majority of the stocks right now in the S&P 500 are higher on the day, but that's not going to be good enough to push this index into the green here, particularly with the big name like Tesla dragging everything down. The S&P 500 going to finish the day down only by 6 points or about 0.1% here, so just a little bit of a pullback off the record highs from last week. The Dow Jones Industrial Average lower by 100 points or 0.2%. The NASDAQ Composite lower by 67 points or 0.4%. And the Russell 2000 also lower here on the day, just 2 points or about 0.1% on the day, guys.
Yeah, looking at the S&P 500, Romaine, to your point, 299 stocks moving higher, 202 moving lower. Different story in the NASDAQ 100. 59 stocks down in the NASDAQ 100, 42 stocks higher on the day.
We were just talking with Amanda Gotti of PNC and talking about the broadening of the market moves. And if you look at the performers that are doing well among the 11 sectors in the S&P 500, utilities, materials, and real estate investment trusts. Utilities up 1.6% with 28 out of 30 names in the green. Materials up by 2/3 of 1%. The weak links here in the market today: communications services, consumer discretionary, and energy, each down at least 1%.
Hey, let's get to some of the gainers on the day today. When Carol's out, that means I get to do the stocks that are in the green. I do want to start with NVIDIA. It did hit another intraday high on the day today, finishing higher by 3.6%. It actually claimed another milestone when we're thinking about superlatives. It overtook Saudi Aramco in market value, making the chip maker the world's third most valuable public company, this after Apple and Microsoft. Shares of NVIDIA up more than 70% just this year. That's after last year's 240% increase. We also did see President Capital Management initiating coverage with a recommendation of buy, setting a price target to $970 a share, so significantly higher than the $852 where it closed today. Also, let's talk about Supermicro Computer. Shares surging this after it was added to the S&P 500 in the latest quarterly weighting change. Shares finishing higher on the day by more than 18%. Deckers Outdoor is also going to be added to the S&P 500. This will happen prior to trading on March 18th, so a couple weeks away. But they're replacing Whirlpool and Zions Bancorp. And then here's one that I actually had not been on my radar. It's a company called Funware. It's a software firm, and it's Funware with a P-H-U-N. It rallied 81% today. It's a software firm that worked on former President Trump's 2020 election campaign. And you saw stocks that are tied to the former president rally today. Digital World Acquisition Corp, Rumble. This is ahead of Super Tuesday. The U.S. Supreme Court also saying that Donald Trump can appear on presidential ballots this year. We got that ruling a little earlier. So investors sending shares of those Trump-linked companies higher on the day.
Just before we go to the decliners, I just want to point out MicroStrategy, which of course closed at that record high, up 20%, and right on cue here, announcing a convertible bond offering $600 million worth of convertible bonds here. So shares down in after-hours trading just by a smidge.
So do you buy that in Bitcoin then?
I was thinking.
Well, they're saying they're going to use the proceeds to buy Bitcoin and for general corporate purposes, which I assume is just
buying Bitcoin.
Yeah.
That is some levered Bitcoin, if I ever saw any. Decliners now, because Tim is having the good day, I'm having the down day. And so we're looking at Tesla first, which is having a very down day. It was the worst performer in the S&P 500 and the NASDAQ 100. And it was off the heels of news that shipments in China, shipments from its factory in Shanghai slumped to the lowest in more than a year. And so we're keeping an eye on that into tomorrow as well, but certainly one of the drags on the S&P for the day. I also want to keep an eye out on Apple as well, because we faced news this morning also of Apple being hit with an $1.8 billion or 8.1 billion euro fine, rather, $2 billion penalty from the European Union. And that was over an investigation.
How much is that in Bitcoin?
Oh my gosh, yes. I can't do the math in my head. I lost those skills in math class for sure, Romaine. But it is a lot of money. And there are a lot of questions about the consequences of a fine like this. Remember, this is into allegations that it shut out music streaming rivals. We saw Apple down today quite a bit. We saw it down more than 2.5% on the day. I also want to look at Spirit Airlines here, because we had finally the news. It was made official here that JetBlue and Spirit had terminated their deal that was highly scrutinized here by antitrust regulators in the United States. Spirit Airlines hired Perella Weinberg Partners as it seeks to think about the path forward here. It is focusing on returning to profitability and options to refinance debt maturities. Still, you saw Spirit Airlines down about 11% on the day. day. At what point it was down more than 15%, and at that point it was at the lowest levels ever. So keeping an eye there on Spirit.
Yeah, New York Community Bank Corp also down 23% here on the day. And we go to the yield space. We talk about that 4-day rally that we had seen in yields last week here. That's now flipping to a sell-off, pushing yields just slightly higher here, 7 basis points here on the shorter end of the curve. And the longer end of the curve, as you can see there, only up by about 2 to 3 basis points, depending on where you look. That could change in a meaningful way with Jay Powell on Capitol Hill. A lot of Fed speak and a lot of economic data points, including a jobs report on Friday. Earnings season still in full swing here, and we're now getting GitLab crossing the wire here. Their fourth quarter revenue numbers, they look good, but the share is moving lower. Revenue came in at $163 million. The street was looking for roughly about $158.5 million. Adjusted EPS also was a beat, 15 cents a share versus a street estimate of 8.4 cents a share. But it looks like the guidance here is what's giving people some pause. 2025 revenue, the company says, will range from $725 to $731 million. The top end of that range is below the average of street estimates. And you have a similar story here when it comes to the first quarter numbers as well.
Not to mention the fact that the stock is up some 18% so far this year. So perhaps expectations were getting loftier and loftier, and when it doesn't deliver on that outlook, you see this bottom fall out.
And here's your adjusted EPS number for the year. A big miss there as well, Scarlett. 2025 adjusted EPS 19 cents to 23 cents a share as a guidance. The street was looking for 37.
That's a big miss.
Hey, the company's CEO saying in a statement that they're integrating AI throughout the software development life cycle.
Who isn't?
Yeah, that's. I mean, that. But when does it start to? I think when does it start to deliver the efficiencies that are promised? And I think that's one thing that investors are still waiting for at this point. It's like we can, we understand the beneficiaries of AI right now to be, companies like, Supermicro Computer and NVIDIA. But when do we start to see the gains being made in productivity from the companies that are actually buying these chips?
Yeah. Well, also, how much investment do investors start to stand for before they want to see that productivity, right? I mean, this is something that has been an area where has been really a competitive area for dollars and investment. Sometimes it's not how quick that you can see that return, but how much return you'll get at the end.
Yeah, I mean, and look, this is like the hottest sector out there. It's chips. I guess to a smaller extent, maybe some of the software names that are trying to sort of fold into that. And it was interesting, guys. There was an interesting story a little bit earlier on the terminal about the CEO of Snowflake who's stepping aside, who apparently, at least financially, is doing a lot better than Tim Cook and some of his peers.
So do you remember last week when we saw this news about Frank Slootman, and I mentioned, the few things you know about him are his history at other companies and then how much money he made when Snowflake IPO'd. At one point, guys, he was making over $100 million a month because of his compensation package.
Yeah, same.
Yeah. I need to have you negotiate for me, Romain.
Yeah, no, you don't want that, trust me.
According to the Bloomberg Billionaires Index, he has a fortune of about $3.7 billion. Not bad for someone who's not a household name.
And not a founder, right?
Yeah, an operator.
Yeah. Other non-founders have done well in the past, but this is like in such a short time. This is pretty incredible.
Yeah, well, Tim Cook, right? He's got to be like kind of one of the richest, right? At least in the modern era.
Yeah.
Yeah.
Guys, that's it. That's all the time we have.
Okay.
That is going to do it.
What'd you do with Carol?
She'll be back tomorrow, I think.
Oh, okay.
Yeah. Don't blame me.
I blame Shanali.
Hey, that is going to do it for our Beyond the Bell coverage on this Monday afternoon. It's our cross-platform coverage of the market close here on Bloomberg TV and radio, Bloomberg Originals, and YouTube. Catch us tomorrow, same time, same place. Happy Monday, everyone.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Okay, Shanali, it's 5'9". It walks like a bird. It's got glowing white eyes, and it's got one job: plucking empty yellow bins off a shelf and ferrying them several feet to a conveyor. And it does it over and over again.
And it has a really cute name.
Digit! Don't worry, it's just in the testing phase. It's not going to transform the logistics industry anytime soon, but it is a major technological leap forward. And it positions its maker at the vanguard of an effort to build machines that can toil alongside human workers. Matt Day writes all about Digit and automation in the forthcoming issue of Bloomberg Business Week. You can read the story now on the Bloomberg Terminal and at bloomberg.com/businessweek. Matt joins us from our Seattle bureau. Matt, good to have you with us this afternoon. If we think about a product like Digit, this is a humanoid-ish robot that is set to do, well, what many people, and I think the numbers prove it, dangerous, repetitive tasks. This is like the holy grail when it comes to automation, if they can figure this out.
Oh, it sure looks like it. It looks like we're on the cusp of something. Predictions like this are kind of dangerous territory for humanoid robots. They've been around for decades in some form, but mostly as kind of stand-and wave machines or other kind of experiments. But it really looks like, especially with agility turning on manufacturing later this year, that they're actually going to step out into the world and do some useful stuff for the first time.
Okay, so that's a point that you make in the piece that I think is really important here. I think it was late last month we covered the huge funding round from Figure.ai that included investors such as NVIDIA and others about humanoid robots. But you make the point in the piece that there are lots of startups working on this type of thing, but the company that makes Digit, Agility, these ones are actually among the first to be tested in a real environment, no?
Yeah, that's right. They were tested by Amazon, are being tested by Amazon starting last October. GXO Logistics, the XPO warehousing spinoff, they tested over the holiday rush, having Digit actually in a warehouse they used to ship Spanx, so just moving tote from conveyor to conveyor. Yeah, these guys look like, at least when it comes to the hardware, they're pretty far ahead, at least cutting edge, but likely ahead of the rest of the pack out there.
We're seeing images right now on our YouTube broadcast and on our Bloomberg Originals broadcast of actually what Digit looks like in the warehouse. Were you able to these are hard, tough places to get into. Were you able to actually witness Digit doing work?
I was, yeah. It was real early days. The first week they had these things on site at a warehouse outside of Seattle. But yeah, it's as advertised, they kind of boop along. It's pretty strange and unnerving to see them actually working in person. I don't know. There's just something about the human form factor, and then the noise they make. There's this kind of like as their actuators are lifting things and they're squatting down, like there's little ee-oo that they do. Kind of a funny little dance.
Hey, Matt, how do humans feel about these robots? I mean, at the end of the day, when you think about AI and what it does do that could help out workers and the way that it can kind of step into jobs that workers would have otherwise had, I mean, how do people feel about this?
I think there haven't been enough cases where actual sort of line workers in work sites have been exposed to folks like Digit, robots like Digit, to have strong reactions. One thing we did learn from Agility is, they didn't tell us exactly who had this experience, but in one of the trials, employees put a vest on Digit, a safety vest. Just the same kind that workers used, and there was kind of a shocked reaction to it. So they decided to go another route and label it, for safety in some other manner. But just the notion that like, oh, this is wearing the same vest as me. This is here to take my job. That was kind of a different, certainly different optically than just a little green robot.
That's really interesting to hear. I'm looking at the Bloomberg Terminal, Matt. Amazon has 1,525,000 employees. The very high proportion of those are employees who work in the warehouse and do deliveries. This is as of December 31st. Does Amazon talk about, or based on your reporting about Amazon, talk about a world where the company has fewer employees because they're able to use robots such as these?
Internally, they've targeted what they call fully automated or highly automated warehouses for years now. It's been definitely a goal for them to at least explore, theoretically, could we do this with basically no people in the warehouse? And they've backed off of that in recent years, in part because the technology just seemed always too pie in the sky, and there were more practical things they could do right now. Now when it comes to sort of public relations and the stuff they say outside the house, they've said, listen, we've been using robots in our facilities for a decade. In that time, we've hired hundreds of thousands of people. Like, our intent with this stuff is not to, just whack away at our workforce. We're trying to make, things more productive, trying to get goods outside of our warehouses as quickly as possible. They say that remains their goal, but certainly when you introduce humanoids into a warehouse, it's going to raise some new questions.
Amazon has had a huge history of how it's operated with robotics in the past. How does this kind of fall into the big picture from how it's interacted with robotics for the last decade in automation?
So most of the robots to date in Amazon facilities have been little wheeled robots that no one would confuse with a person, right? They're more in common with a scooter or a self-driving car than a humanoid. Those things today hold all of Amazon's inventory. They drag the shelves around to waiting human employees. You know, what we're looking at with humanoids in their warehouses and in other facilities, if the technology proves out, is kind of being able to plop a robot down in a space that wasn't specially built for it, right? You can think about robots working in the back office of a post office, robots working in a storeroom, right? You know, not requiring kind of chain link fences and, you know, giant industrial facilities, you know, purpose built or purpose retrofitted for their presence, right? Presumably, we could just plop down these bipeds wherever we need them.
Bipeds, 2 legs, humanoid. It's all stuff like out of science fiction. You were referring earlier to the Kiva Systems purchase that Amazon made back in 2012, which for a long time was its biggest acquisition. It was $775 million at the time. A lot has happened, obviously, since then. Hey, Matt, I'm wondering if these things have to look like people, if these robots have to be humanoid in order to do the things that people do. Matt, do you think they have to look like human beings? Like, you know, the Kiva ones that you mentioned are on wheels. They wouldn't be confused for a robot, but like, or for a person. In order for these robots to actually be productive, do they actually need to look like human beings?
I'm not sure they need to look like us, but there's a debate in the industry about how much they need to look like us. They have to have our similar shapes and dimensions to be able to move around the same space. But if you look at the startups that are plugging away at this, like Agility, you know, definitely from the pictures you've shown, it takes a kind of minimalist approach. Like, it's clearly a robot. They're not trying to pass these things off as human. There's no, you know, fake nose or mouth. If you look at some of their rivals, so including some of the ones that are raising money right now, they have much different approach, right? You know, you see robotic arms covered in fabric material to make it sort of blend in a little bit better. You see attempts at faces with, you know, more human features. So there really is a range of opinion on whether they need to shoot for, you know, hey, this thing looks, you know, plausibly humanish, or, you know, no, sorry, this is a work machine. And the work machine approach is the one that Agility has taken so far, and the one that's paying some dividends with Amazon.
Matt, we only have 30 seconds left here, but like, what's the main innovation that's allowed these robots to exist and to be developed right now?
I'll cheat and I'll say batteries, as well as AI, right? These things being able to pathfind on their own, that's key.
That's a really good point. Because you got to have these things have to have power, and they probably use a lot of power, especially given all the complex calculations that they're doing. Hey, this is a really cool story. I truly cannot get enough of it. Was really excited to chat with you all about what's going on at Agility Robotics and how they're testing them out at Amazon. Matt Day, really appreciate you taking the time. Matt Day is Bloomberg News technology reporter. Check out his most recent story, or among his most recent stories. He's got quite a few. You can check it out on the Bloomberg terminal. Also, read this one at bloomberg.com/businessweek. Once again, it's about Agility Robotics targeting the warehousing industry with 2-legged bots, and he sees them eventually stocking shelves and working in hospitals. You're listening and watching Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We're looking at shares of GitLab after hours. They are down now by 11% after earnings. It's 2025 adjusted EPS forecast, lagged estimates. So shares of the software company are trading lower now. After hours, we got GitLab down by just about 11.5%. Turned out to be a down day, a down Monday. The relentless rally in stocks took a breather today as traders await this week's batch of jobs data and remarks from Fed officials who, as investors look for clues about the interest rate outlook. S&P today down 6, lower little change, down by about 0.1%. The Dow down 97, decline there of 0.2%. Nasdaq Composite Index down 67, a drop there of 0.4%. The 10-year yield right now at 4.21%. The 2-year 4.60%. Spot gold up 1.5%, 21.15 the ounce. West Texas Intermediate crude down 1.6%, 78.73 a barrel. Bitcoin surging today by 6.6%. Now it's 67,030 on Bitcoin. JetBlue has formally abandoned its pursuit of Spirit Airlines more than a month after a federal judge blocked the $3.8 billion acquisition on antitrust grounds. JetBlue shares higher today by 4.3%. Shares of Spirit lower today by 5.4%. Again, recapping stocks lower, S&P down 6, a drop today of 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, we're kind of going all in on private equity today, as I mentioned. We got a great lay of the land earlier from Christina Paget, head of leveraged finance research and analytics at Moody's. So let's stay with private credit, but go a little more specific. We'll talk venture debt. Typically, venture debt is financing that's offered for startups that have yet to make a profit. The equity of existing investors and startup owners, it's not diluted with venture debt, since unlike venture capital, those who provide venture debt aren't taking a piece of the company. For an update, we got back with us David Sprang. He's the founder, chief executive officer, and chief investment officer of Runway Growth Capital. He joins us from Silicon Valley. David, good to see you. How are you?
I'm doing well, Tim. How are you?
We're doing well, thanks. I do want to say welcome back to Runway Growth. I did see back in July you went on leave, so it is really good to see you back at the helm. How is everything?
Great. Yeah, life is good. It's a very interesting time in our business. There's a lot of turmoil happening, particularly in the early stages, we're a year now past the demise of Silicon Valley, and that part of the market is still being figured out. It's not where we play. We play in the very, very latest stage of the market. So the SVB situation hasn't really impacted us, and the world continues to be really interesting for us, and more really good companies are staying private longer and needing capital. And as you mentioned, debt is a fantastic solution, particularly at the late stage, because you don't have to give up any additional equity.
So what happens in a high rate environment like we've been in for the past 18 months? What happens to your business, and what happens to how much these companies have to pay to access capital?
Well, first of all, I would point out that it's really not a high rate environment. It's higher.
That's a good point.
Than we were.
High,
But,
depending on where you are sort of in your Silicon Valley life cycle, right?
Yeah, that's true. And but we've had many unbelievably successful, important, impactful companies that have been financed with interest rates of 5%. So it's not high relative to history, but it's high relative to where we were. And there's certainly been a sticker shock and a little time to adjust to it, and a requirement that everybody be perhaps a little bit creative, and we're doing some of that ourselves. Mm-hmm. But the David, interest rates going from essentially 0 to 5% or over 5% in less than 2 years that is dramatic and impactful, and has caused a little bit of a sticker shock. But we're working through that, and more companies are realizing that 5% base rate, although it may be higher than where we were 2 years ago, and shoot, we missed 0 interest rate, but 5% is still quite low relative to history, and quite low relative to the cost of equity, and quite low relative to the return on investment that will be achieved with the loan capital.
But the interesting thing about loan capital to the venture capital community here, companies who have traditionally taken venture debt, a lot of these companies had little to no profit. And in at least equity markets and certainly broader debt markets, there seems to have been a much broader set of discipline here. Are there a lot of companies that, if they're just not making enough money here, are being turned away by debt markets because we are in a different environment now than we have been for the last decade?
Yeah, it's a really important point. And at Runway, we're fortunate that from the very beginning, when we founded the business in 2015, we've always focused on path to profitability and have looked for companies that had a near and a clear path to profitability, and therefore not subject to huge amount of downstream financing risk. So that's always been an important part of our underwriting. But your point is, I think, very fair and has become a mantra in Silicon Valley and in innovation economy and in startup world, is you really need to be thinking about your road and your path and your funding path to get to profitability. And many companies that raised capital in 20 and 21 and then realized either through the coaching of their investors or however, that it's not going to be so easy next time. Valuation's going to be lower. We need to make this money last. Mm-hmm. They've done a good job of that, perhaps by cutting burn or finding other paths. But now they're running out of capital, mm-hmm. and they're coming back. And your point is exactly right. Well, David, many of them are being rejected.
You're right. If many of them are being rejected, I really wonder what the environment looks like moving forward. Because, you alluded to the fact a little earlier that we're almost 1 year since the collapse of Silicon Valley Bank. I remember the years leading into this kind of boom period for Silicon Valley Bank. The largest investment banks in the world were nervous about providing debt to venture-backed companies, particularly ones that were not turning large profits. What does the environment look like now after all the lessons have been learned?
Well, it's important to separate early-stage venture lending from late-stage venture lending like we do. And I guess I would add that a big factor here is the regulatory environment. And the Runway is a non-bank lender or specialty finance company, so we're not subject to oversight by the FDIC, or OCC or anything like that. We are subject to regulation by the SEC, and so your point that lenders don't like to lend to pre-profit companies is very true, and a lot of it is driven by their regulatory oversight. And so what you find is that the banks that are serving this market and attempting to step in perhaps where Silicon Valley Bank played are not so interested in making the loans. They're much more interested in taking the deposits and providing other fee-generating services, like credit cards and foreign exchange and that kind of stuff, and don't necessarily want to make the loans. Mm-hmm. And so that's where somebody like us can step in and create a very synergistic relationship with a bank. And so like we would explore ways to work with HSBC or JP Morgan or Silicon Valley Bank or Bridge Bank or Square One or any of these banks where they want the deposits but not the loan, and we want the loan but don't take deposits, so we can partner up nicely with them. We don't lend to early stage companies, so that's not a fit for us. There is going to be some failures. There already have been. There's going to be a lot of private to private mergers as these companies attempt to find a way to survive. So I'm predicting a very challenging year in 2024 for early stage companies that don't have a really clear path to profitability and don't have equity investors that have dry powder and are willing to help them get there.
David, we always appreciate you coming on. It's good to have you back on the program with us. David Sprang is the founder, CEO, and CIO at Runway Growth Capital, joining us from Silicon Valley. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The U.S. Supreme Court has thrown out the ruling of Colorado's highest court that Donald Trump cannot appear on the ballot in that state because he engaged in insurrection on January 6th. Trump thanked the court for its decision.
I think it's a very big day for America. I think it's a very big day for liberty, and I think it's just a great day for this country.
Trump says today's ruling will have a unifying effect. The justices were unanimous and said that the decision on whether to disqualify someone from running for office if they engage in insurrection should be left up to Congress, not the states. Alan Weisselberg, the former chief financial officer of Donald Trump's real estate company, pleaded guilty to perjury today in connection with testimony he gave in New York State's civil fraud case against the former president. President Biden has been putting the finishing touches on his State of the Union address that he'll be giving on Thursday. He's been at Camp David all weekend working on the speech that will play up the accomplishments of his administration. A preview of the speech indicates he'll outline how he's making the wealthy pay their fair share and how he's working on reaching a bipartisan compromise on veterans issues and fighting cancer. 22-year-old Jack Teixeira today pleaded guilty to 6 counts of willful retention and transmission of national defense information. The Massachusetts Air National Guardsman was arrested for posting highly classified military intelligence to Discord, a social media platform. Matt Olson is Assistant Attorney General with the Department of Justice.
Mr. Teixeira callously disregarded the national security of the United States, and he betrayed his solemn oath to defend the country and the trust of the American people that he swore to protect.
Olson says this case demonstrates the importance of keeping all classified information secret. Teixeira has agreed to accept a 16-year prison term. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for bingo.
We can do that.
But
There goes my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision, that's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Strategist at CFRA, and he was a guest today on Bloomberg Business Week.
Well, I think the market is coming to terms with the fact that the Fed will likely be slower to lower interest rates, meaning that they will probably have their first rate cut in June, which is interesting because historically, going back to the late 1980s, It's taken about 11 months between the last rate hike and the first rate cut, which would be exactly on target this time as well.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. So again, turned out to be a mixed day for the U.S. stock market today. S&P lower by 6, drop there of 0.1%. A couple of names being added to the S&P 500 index, and they both advanced today. Deckers and also SMCI. Both of those companies did advance today. Again, recapping, stocks traded lower, S&P down 6, a drop today of 1.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Climate is not weather, but there is a connection to extremes.
Yes and no. Funny thing, as time goes by, increasingly we're seeing the contours of climate change in daily weather. It's not a blanket statement you can make at all times, but certainly elements of the drama that we're seeing this week has to do with climate change. Particularly when it comes to the fires, heat is the most direct consequence of climate change. And the Texas state climatologist has said this week that, indeed, climate change is behind the heat and dryness that allowed these fires to really take off. You see a similar thing in Australia.
I think we need to kind of talk through the extent of what we're seeing here as well, because on one hand, for example, in Texas, you've seen wildfires before in late winter, but this is the worst we've seen in the state's history, according to our reporting. So what is happening that is surprising you the most right now?
I think the simultaneity of it all is something that it's hard to get used to, and maybe we never will. But just having the scale of these two dramas, just in the United States alone, having Texas's largest wildfire in history, they had just unusual dryness through February, and then at the end of February, the temperature spiked, and these winds came out of the west and just ignited. It wasn't the actual ignition, but it created this conflagration based on conditions that Texas hasn't seen in at least I don't know how many thousand or tens of thousands of years. California, it's a little bit trickier. They've just had an absolutely dramatic amount of snowfall, as you said. California is interesting anyway, because there's no such thing as normal California weather. This is the state that for the last 10 or 15 years, it's either absolute drought or absolute
like a deluge.
Blizzard or rainfall if it's not warm enough. And it's harder to pinpoint a climate connection, kind of the farther you get from the direct heat signal. One thing that's interesting to keep in mind when you see an event like what's going on in California is the jet stream has been misbehaving in recent years. This is the band of winds, high level winds that whip around the continent and are supposed to keep the Arctic air in the north and the more temperate air in the south. But it's been getting wobbly, and there's been some scientists publishing for years now showing a connection of how rising temperatures around the world are causing that wobbliness in the jet stream. It's not a done deal. There's a lot of scientists who aren't sold on that explanation yet, but it's certainly something to keep in mind as the years continue to tick by.
Eric,
weird things.
It's weird to call it extreme weather because it's not necessarily extreme anymore. It sort of feels like if we're not talking about this in Texas or in California or in Australia or in South America or in India, we're talking about it in a different place and a different time of year. This is the new normal, it feels like. It's not even the new normal. This is the normal. This is just, correct me if I'm wrong or tell me I'm wrong, this is just how we're going to live the rest of our lives, right?
Yeah, unfortunately, that's the case. It's there's a very glib example that I'll trot out, in like informal talks. Probably never once on radio, but let's go for it. Like somebody who's falling off a building, like they don't think of the 18th floor as the new normal. They don't think of the 16th floor as the new normal. They don't think of the 10th floor as the new normal. So obviously, this is a glib comparison, but I hope it communicates the fact that what's normal is change, and what's normal is our encountering of extremes that humanity in some cases have never lived through. In some cases, things we've lived through are just becoming more frequent that we only saw very rarely in the past. And there's all kinds of other interesting things to think about, when we talk about this. One of them is just like the fallibility of our memories. There's been interesting psychological behavioral research on just how we remember weather, and like we all have a kind of changing baseline of what we think normal weather is, and like what I or you might consider a big storm, in 2024, without giving away anybody's age, a number of years ago, we might have had a completely different idea of what that meant. So everything is in motion, not just the climate, but also, our own ways of experiencing it, really.
Really quickly here, in like 30 seconds, are there areas, you think about Texas, for example, where people have been moving, that are going to become less inhabitable, that are currently very popular destinations?
That is a fascinating question. And if we had, I know I have now probably 25 seconds, but like, that is a huge question. It's a question that you're going to be asking like at the top of the interview in years to come, because you're absolutely right. The places that are seeing extremes pushing toward human limits are where we're moving in the United States.
Next time, Eric, we'll come back to it first.
Really appreciate you joining us, Eric. That's Eric Roston, Bloomberg News sustainability editor, joining us from New York. This is Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. American Airlines has agreed to buy 260 short-haul aircraft that will include a massive deal for Boeing's 737 MAX jets, a key endorsement of the plane maker as it works through a crisis of confidence following that near-catastrophic accident in January involving an Alaska Airlines plane. American today down 5.4%. Boeing today up by 0.3%. Elsewhere in the aviation industry, JetBlue has formally abandoned its pursuit of Spirit Airlines more than a month after a federal judge blocked the $3.8 billion acquisition on antitrust grounds. And with more on the story, here's Bloomberg's Kimberly Adams.
Charlie, the two carriers say the decision to terminate was mutual, and it comes more than a month after a federal judge blocked the $3.8 billion acquisition on antitrust grounds. The decision ends JetBlue's lengthy quest for Spirit and marks a sharp reversal after the company's pledge to fight for the tie-up. Even as analysts said, an appeal had little chance of succeeding. JetBlue had hoped to accelerate its growth with a quick infusion of Spirit's planes and pilots at a time when both are in short supply. Charlie?
And that's Kimberly Adams reporting. JetBlue today up 4.3%. Spirit plunged 10.8%. Arkhouse Management and Brigade Capital Management have boosted their offer for Macy's, the department store chain, by 14% after the retailer turned down a previous proposal. The investors are now offering $24 a share for the department store operator, up from $21 a share previously. Macy's advanced today by 13.5%. Macy's now at $20.45. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenevec. That is Shonali Bassick in for Carol Master this afternoon. Over there to my right, we've got Doug Krisner, who has Daybreak Asia coming up at 8 p.m. Wall Street time, along with Brian Curtis. Doug, how are you?
I'm doing well, yeah.
Asia Tuesday.
Asia Tuesday. How are you doing?
We're doing well. We had a good program today. We just wrapped up talking a little bit about climate with Eric Roston, who covers sustainability here at Bloomberg.
John Kerry, right?
Right, yeah, I just saw that. Yeah, stepping down. And what happens if, former President Trump gets reelected and kind of pushes back some of the things that John Kerry tried to do?
So what's the conclusion? What happens in that scenario?
Well, what we talked about on our program was weather and climate and the extreme weather that we're seeing increasingly becoming the new normal. I mean, whether we're talking about wildfires in Canada,
or Texas.
Texas, exactly.
Right.
And then the huge storm in California and fires in Australia too.
Absolutely.
Yeah, all over.
Absolutely.
What's on your radar?
So it's the NPC. This is kind of the big confab for the leaders in China. And Li Qiang, the premier, is expected to unveil his work report today, but he won't be holding a press conference. And that's pretty noteworthy. This is the first time since, I think, 1993 that a premier has not done this. And so the China watchers are trying to read, pardon the expression, tea leaves here to try to understand that what's going on internally in terms of a dynamic. The market, I think, would have hoped for a little bit more in the way of transparency. It seems like we're moving in the opposite direction. A couple of key things to be on the lookout for: the growth target for the full year and the degree to which we're going to see a wider budget deficit as a way of potentially funding a little bit more in the way of government spending. There's been a lot of accommodation already in certain pockets coming from, on the fiscal side, not so much, more on the monetary side. But people have been waiting for something to be delivered that was going to reinvigorate the economy, and that's really going to mean trying to restore confidence in a big way.
So do you see the removal of this event as, like, how do you read into this? I know you said that China watchers are trying to make sense of it. Is this, and the market wants to see more transparency, but this is a break from at least recent norms.
That's right. He's only been premier for a short while.
Okay.
And one of the things that we're trying to understand is the relationship between Li Qiang, the premier, and Xi Jinping, kind of the chairman, of it all,
so
president
does this make
and chairman
them look
of the party.
Close?
Perhaps, and maybe that she is being a little bit more assertive in how he wants to control the messaging on any of the reforms that he wants to put forward or any of the things that they will announce in terms of trying to reinvigorate the economy. Go ahead. What were you thinking?
Well, I was just thinking of what we heard from Abigail Doolittle a little earlier when she commented on the way the markets were today in China.
Well, stateside?
No, in China. And well, I guess NASDAQ Golden Dragon, Chinese stocks that are traded here in the U.S.
Did you go ahead? What were you going to say?
Well, yeah, especially because increasingly the Asia trade is floating over into the U.S. day.
So there was a very interesting interview this morning on surveillance. Did you see that with the chief investment officer of the, it was Goldman's, I want to make sure that I get her name correctly, Charmin?
Masavira-Ramani, yeah.
Okay. She's basically saying that clients are being told to stay out of China right now, even though asset prices have fallen so far. And there are people who are asking the question, is this a buying opportunity? Are valuations so ridiculously cheap right now that it makes sense? And what she was saying is, no, we're telling